What's going on, everybody? Hope everybody's doing well. My apologies for not making a video yesterday. I just got caught up with work. Didn't really have time to get on here and get anything recorded, but we're back at it today. There's not really much going on in the Keel world right now. You know, we're kind of just floating around in a quiet period, waiting until the Keel earnings, which is next week on Monday. And actually, guys, I should be able to go live for the Keel earnings because, yeah, I got off work, so I should be able to go live. I do have a doctor's appointment that day, so I should be done before that or after that. So we'll see. You know, I am off work next week. I didn't really know that was going to happen. You know, I had a doctor's, it got scheduled and this week and for next week. So we will be live for that, hopefully. Unless I'm still in the doctor's office, then, that'll be another thing. But like I said, man, we're just in a quiet period for Keel Infrastructure right now. We're back above $4, trading pretty healthy above $4 right now. The other day I did buy 200 more shares, and if this thing goes back below $4, I'm probably going to buy 200 more. That's kind of been my plan here lately, is if it trades above 4, I'm just going to sit there and hold it. If it, dips back below 4, I'm going to continue to DCA in. My average cost right now, so put it this way, when I first got into Keel, my average cost was, I think, $5.35, right? Now, my average cost is $3.90. So I've dropped it by damn near $2, when it had this dip. So, I've added a pretty substantial amount when we had that pullback for sure. And like I said, I don't know what hit me. Just when we had that pullback, something come over me, belief-wise. It was just like, man, this is the moment. This is the moment where you're getting a company that you believe in at an incredible discount. You better hop on it, right? You better hop on it, because if you have the conviction that you have and you do not buy this, you're going to be kicking yourself in the ass for a long time, right? But, on the flip side of the coin, I got a little fucker over here telling me, maybe you shouldn't be buying this much Keel Infrastructure. Maybe you should, stay true to what you originally do and, keep it under 10%. Well, I done flicked him off the shoulder, and, it's up well over 20% of the portfolio now. We got a lot riding on this earnings, right? And I see a lot of people out here, even a guy in my Discord, which, shout out to you. He said in the Discord that he sold out of Keel this week because it was scaring him a little bit leading into the earnings, but he's going to buy back in at a later time. Which is fine, right? If that's what he wants to do, that's 100% fine. But here's my thought, right? If you're doing that because you see a better opportunity somewhere else, then by all means, that's fine. But if you're going to have Keel worrying you when certain dates come up and you're going to sell out of the position, like maybe Keel just isn't the right position for you to be holding, right? If it's worrying you that much to where you're going to sell out of it. Because it can also bite you in the ass, because I've been in this position as well. I've sold out of position thinking it's going to go down, and the thing shoots up, massively. Now, could you get lucky and it drops and you get back in at a better price? Of course you could. But you run the risk, right? You run the risk. And he also said he was a beginner, which kind of makes me feel, this is what I told him in the Discord. Like, I don't recommend Keel Infrastructure to a beginner because it's such a low market cap, volatile name, right? It's just not a company you want to be in as a beginner investor, because it's going to wear on your emotions a lot, right? Because it's going to have a lot of unsettling time periods because it's such a new company, and there's going to be so much speculation, and so much can go either one or the other way. And, you're really going to be just on a weekly basis questioning yourself and questioning your position in that company, right? Keel is a name where you want to have the conviction, and if you want to swing trade it, by all means, that's fine. But Keel is not a name you want to get into expecting them to make announcements this week, expecting them to build a whole data center in a month, right? Expecting them to get 100 megawatts of power online in 2 months. That's just not how this works, right? Keel Infrastructure is going to be a multi-year hold. And if you're able to buy it and they're able to execute, and you're able to hold it for that multi-year journey while they execute, you're going to be massively rewarded if they do what they're supposed to do. Massively. But this is where the risk comes into play as well. Like, if, it's just, man, it's a hard name to really tell people to buy, right? Because it's so risky. And that's why I always tell people, like, please do not follow me into this trade unless you've done, you know, your own due diligence and your own research and you have your conviction in the company. Because if you don't, this is not a trade you just buy into blind. This is not a trade like any other thing where, okay, I'm going to buy Meta because I see somebody buying Meta. I'm going to buy Amazon because I see somebody buying Amazon. Those are blue chip names. Like, you're fine. You can buy into that because you've seen somebody talk about it and be just fine. Keel Infrastructure is not that type of name. Keel Infrastructure is not that type of name. You could lose a shitload of money in Keel Infrastructure if the thesis is wrong. Because here's the thing, they still have to prove themselves, right? Yes, they've created this beautiful blueprint. They've spoken very well on interviews. They have a big grandiose idea of the things they want to do. They've raised capital. They've got capital to fund their ventures. But here's the one thing that you can't be blind of. They still have to execute. They still have to execute. And they still have to make partners and create partnerships with people. That's just the matter of the fact. That's just a matter of fact. You can have these big grandiose blueprints. You can have the property. You can have whatever you want. But if you don't have any partners willing to work with you, or you can't execute on everything that you've said, the stock is not going to do good, right? The stock is not going to do good. That's why I've always said, you know, I'm giving it to the end of the year. And I'm not really worried about this earnings presentation. Yes, it's going to be nice to hear some updates, but I'm not putting my whole investment thesis on this Q2 presentation. Now, the Q2 presentation, do we hear some announcements? That would be great if we hear some good announcements. But like I said, I'm going to give them to the end of the year. Could that holding to the end of the year be a mistake? It possibly could. Because the stock could probably, you know, it could probably go back to $1. Who knows, right? Who knows? But that's just the risk I'm willing to take because that's how much conviction I have in this company. And I think they could really, really do well. So let me know what y'all plan to do with it. You know, I see so many mixed people. And I have a weird feeling that there's a lot of newer investors jumping into Keel Infrastructure, hoping for a quick 10x. And I just really, really, really hope they don't get burned, right? Because that's going to leave a very bad taste in their mouth, very bad experience, and it could push them out of the market entirely. And I've seen it happen over and over and over to people because they jump into a name with a bunch of hype, shit don't pan out, and, you know, they stop investing. And it's sad. You know, here's the overall bigger picture, guys. In the stock market, you're going to have winners and you're going to have losers, right? You just hope your winners outdo your losers, right? I've had some stinkers in my journey. I've had some big old stinkers in my journey. But I've also had some pretty good winners. And when the winners win, 90% of the time it outweighs the losers, in my opinion, and in my situation. So you just got to weigh your pros and cons. You got to, you know, risk to reward. And in my opinion and in my analysis, Keel fits my risk to reward profile. And like I said, I just really want people to do their own research and do their own work before jumping into a company. Because I have a feeling that there's a lot of newer investors on the Keel train that bought in very high. And they're starting to get shaky knees and they're going to sell out. And if they do and Keel jumps up or whatever, you know, it's gonna hurt a lot of people, man. And I don't like seeing that happen. So anyway, guys, that wraps up for the video today. I'll have a more in-depth video coming in tomorrow or sometime this week. I've just been so busy at work. It's been a hectic week around here. And, you know, I'm just glad I found time today to get something out. But it's just been a wild, wild week at work. So anyway, Keel's up in the market. Keel's doing fine. You know, it's up about 2% today. It's trading over $4. As long as we stay over $4 leading into earnings, I think we're going to have a good, you know, we're in a good position. So we'll see what happens. We'll see how the rest of the week plays out. We got a few more days until earnings. I'm getting excited. I'm getting a little nervous because I don't know what they're going to come out with. But we'll see. I got a strong feeling that you know, they're going to have some pretty meaningful announcements this earnings. But we'll see. So hope y'all enjoyed the video. Please hit the like and subscribe. And we'll see you on the next one.